I'm going to introduce the panel here, and I'll start with our Ferg, Trader Ferg. You might know him as Trader Ferg on Twitter. He's joining us. He's our new guest today. Ferg is from New Zealand. He's been trading full time for 4 years now. He actually lives in Bali. He has a very hard life. He has to surf in the morning and, spend his afternoon and evening researching the markets. Ferg, by his own admission, is attracted to unloved, highly cyclical sectors. So welcome, Ferg. Really great to have you on the show today.
Thanks, Sean. Really appreciate it and happy to be here.
Great. Next, I'll introduce Terry Papineau. Terry hails from Sudbury. Terry is a retired education superintendent. In his spare time, when he's not spending time with family, Terry is a very active contrarian investor. He's been in the uranium space, I believe, since 2017, attracted to the contrarian nature of it because it's been such an unloved sector. So Terry, great to have you back. Welcome to the show.
I'm happy to be here, John. Thanks for inviting me.
No problem. Our next guest, you might know him as Uranium Insider, Justin Hune. I believe he's joining us from California. Justin is the head analyst at Uranium Insider, which is a uranium-focused investing newsletter. I believe before he did that, Justin was an active trader. So, Justin, great to have you back today. Welcome to the show.
Thanks for having me. Happy to be here.
And last but not least on our guests, Andrew Weekly. Andrew is the CEO of Smith Weekly, founder and CEO of Smith Weekly Research. Andrew's been covering the market since 2012 with a focus on natural resources, and he's been investing in the market since around 2004 on his own. His background is in business management and industrial construction. Andrew, I believe you're coming to us from Panama today. You originally weren't able to join, but at the last minute you were able to join us. So it's nice to have you back as well. Thanks for joining us this morning.
Yeah, thanks, John. Hello, everybody. And yes, I'm able to join, and I'm in lockdown here in Panama.
Okay, and my other co-host today, Carl Boyd, he's the one that you can see on the webcam with the fancy wall behind him. Carl is the co-founder of Follow the Money. Carl got interested in the uranium sector probably a little bit later than some folks, but earlier this year at VREC, was listening to some of the viewpoints at that time. Arguably uranium was still very much a contrarian play and unloved. The moves in the prices hadn't happened yet, and Carl took an active interest based on what he heard. So Carl, thanks for joining me today, co-hosting the show.
Absolutely. Thank you. I'm looking forward to the discussion, as many of our members are. Thanks for joining us, everyone.
All right, so let's get started. Ferg, because you're new to the group, I'm gonna let you go first, and I just want to get all four panelists' thoughts. Your key takeaways from the call this morning. Take it away. Ferg, can you hear me? Okay. Chat group, just guys, you can let me know if everyone can still hear me, right? My sound is still good. Sorry.
Can you hear me now?
Oh, there we go. There, you're back.
Yeah.
Okay.
Sorry, it just locked me up for a second. Wouldn't let me turn the mic back on. Yes. So my first takeaway from that was I was just surprised not surprised, I guess, but had kind of hoped the restart would be based on a bit more sort of term activity, I guess. It was because I had enjoyed the statement that it would be sort of an economic decision to bring it back on, and that economic decision turned out to be more on the sort of the cost of care and maintenance, I guess, the 10 to 12 million a month, as well as like obviously the workers' safety. So that was my first sort of thought. Was it was a pity it wasn't because they were they had a bit more activity and signing a few contracts. But then again, I guess with their recent interview we heard with Riaz, I think he was on Crux when he was saying that all the utilities are really just in sort of like trying to deal with COVID and all the flow-ons from that. They're not really thinking about contracting currently. So yeah, that was my first sort of takeaway from it. Was it was a pity they weren't talking more about sort of any contracting activities.
Okay. Justin, we'll maybe switch over to you. Your key takeaways from that call?
Sure. I mean, I think that the overall tone of the call was a little bit kind of bearish, not necessarily the data and the elements that they stated, but just kind of the tone of the call. I think that we're seeing that in the stock price action right now of Cameco erasing the entire month's gains, essentially. But there weren't really a whole lot of surprises there. I mean, I had kind of stated a number of months back that I felt that September would be the soonest they would be back online, and it sounds like that's what they're shooting for. And I think that it's easy for us to want them to keep it offline for longer to encourage the spot price to go up. We also have to understand that they are a publicly traded for-profit company, and they have a lot of elements to consider at the same time. So I don't know if you heard him mention they've got $8 to $9 million a month care and maintenance for Cigar just to keep this thing offline. And we don't exactly know what's on offer in the spot market. And so they may be looking at a situation where their options of pushing to get some kind of production out of Cigar sooner rather than later is better for their bottom line than squeezing the spot market higher, because that affects their bottom line on the fixed portion of their contracts. So while they have to kind of come out and fire some shots across the bow when it comes to making statements as a for-profit company with shareholders that are expecting them to turn a profit, essentially, and to act in a way that makes sense for their bottom line. We also hear language that they basically don't know what this is going to look like going forward. So while they're going to make an effort to bring Cigar back online in September, in the second half of September, they don't know what's going to happen between now and then. They don't know if they're going to have to take it slow. They don't know how much production they're going to get. They don't know if COVID is going to be impacting that supply. And they've already stated, that they're expecting that production to be lower than normal for 2021 as well from Cigar and Inkai. So I would say just, the overall tone of the call I felt like was somewhat bearish. Kind of threw a wet blanket over the sentiment of the sector, at least temporarily for the day. Let's see if it lasts, but not a whole lot of surprises in there for me.
Okay, thanks, Justin. Terry, maybe I'll turn it over to you.
Sure. Just as Ferg and Justin, for me, the key takeaway is a confirmation that Cigar Lake is coming back online. And as Justin just mentioned, we're seeing a correction or a pull down in Cameco's share price right now. I think it's due to the fact that now there's a confirmation that it's going to come back online. People were hoping that it would be later. But at the same time, they're bringing it back because they need the pounds. They're not sure, how much material is still out there. So they want to make sure that they're able to secure the pounds they need to deliver into their contracts. So it's kind of a good news, bad news story.
Okay, and Andrew, anything to add to what the other guys have mentioned?
Yeah, I wasn't able to hear all the call, John, but it sounded like they wouldn't guide on when full ramp up was going to actually happen. They talk about starting in September. but when that actually gets to full capacity or full production as intended is out to be determined. But I would say it spills into next year probably, and that assumes that phase 2 of COVID is on the decline from here and a phase 3 doesn't come. But I think that was one highlight, and I think it's for economic reasons. Look, it hurts. It's painful to come into the market and buy at current prices and maybe higher prices for them. And we saw that starting, if you look at the financials here that were just put out, it hurts. And so you tack on the care and maintenance, the C&M of all of their assets, it's a lot of money. I mean, MacArthur, Cigar, Rabbit, it's a lot of money. And so, yeah, they're hurting a little bit. So I think that's why they're bringing this back on. And, you know, they can use COVID and health and safety for whatever reasons they would like. But the fact of the matter is it's economic, and, you know, not surprised. And I think it's great. I mean, for the sell off this morning, anybody who has cash should be happy.
Yeah, exactly.
Yeah, I actually added a little bit of Cameco this morning on the dip, so I'm taking advantage. I mean, maybe it goes lower as a scaling in, but not investment advice, of course. Yeah, I think from my own calculations, and Andrew, you might have missed the part, but they did guide towards the middle of September for a restart of the mine, to be starting to ship slurry trucks to the McLean Lake mill. They mentioned that the first 2 weeks of September would be a maintenance shutdown. I personally think their guidance of, you know, they said they're going to produce 5.3 million pounds this year. They've already produced 2.1, which means, you know, they have to produce 3.2 million pounds. That actually, to me, looks like almost a full, you know, running at full capacity all 4 months. So I personally feel that's a bit ambitious. I'm not sure they're actually going to hit that. It'll be interesting to see how that all plays out. But you know, the deficit they would have to make is 3.2 million pounds by my math, and you know, the Cigar runs at about 0.8, you know, 800,000 pounds a month. So you know, it'll be interesting to see how that plays out. I'll start with a question that we'll start with getting to some of the questions right away. And the questions from Rodrigo Oria. He asks, how much mobile inventory do you think there is in the market? So this did get brought up on the conference call. I believe Tim and Grant both mentioned that they do not believe there's a lot of inventory. They're not seeing a lot of inventory mobilization. A lot of that inventory is just coming from uncommitted production. But I'll throw that out to the panel. If somebody wants to weigh in on whether they think, how much inventory they think mobile is actually in the market. Do you want to take that, Justin, or?
Oh, I'll start.
Sure, Terry, go ahead. Yeah.
Can you hear me?
Yep.
Yeah. So, so inventory. Tim made specific comments about mobile inventory. So there is inventory, but is that inventory mobile? And you know, there's a lot of work that's been done, and a lot of people are trying to figure out, you know, what's that magic number. And I don't think anyone has it's very difficult to ascertain. But what's important is that inventory mobile? In other words, are people willing to part with it? And Tim made a few comments that the inventory is not mobile, and you alluded to the fact that the purchases that they made is not coming from inventory, is coming from, you know, producers like Olympic Dam that are, you know, they've got a little bit more production that they don't need, they can part with it. That's mostly where it's been coming from. So when Cameco is buying, they're not buying someone's inventory, they're buying from producers that overproduced or uncommitted production. And the important factor here is that the uranium sector and uranium availability is inversely related to the price. So most other commodities, when the price of something goes up, people will be more willing to sell it because they want to, for profit reasons. But in the case of uranium, as the price goes up, people need uranium. It's strategic, so they hold on to it, and that drives the price even further higher. So although I haven't answered the question to say exactly how much inventory is out there, the factors that I mentioned, I think, are important to consider with regards to inventory.
Yeah, and I think everyone needs to understand, obviously, the panel, along with pretty much everyone else in the market, when it comes to guessing how much mobile inventory is, everyone is just sort of putting their guessing hat on and making an educated guess at some point. No one knows for sure. But anyone else want to weigh in on that question at all? No takers? Okay. So I'm going to move to the next question. I think it's an interesting one. Nick is asking, with the last bull market being spurred by a perceived deficit, what factors do you believe are causing the stagnation in equities when there is a real deficit in the uranium market? Ferg, maybe I'll throw that off to you to start.
Oh, thanks. Well, yeah, I think we've all been wondering the same, and in most sectors, it's after COVID, it seems like a lot of just the passive flows. Like if you're not in the fangs, you're really missing out in general with them driving the broad market, and there just seems to be a lot less active investors around to pick up the bargains. So my thoughts is there's going to be a lot more eyes on what Kazatomprom does moving forward, with whether this does stretch out into September and then possibly October, and then that's really going to be undeniable, and people have to start acting, and you'll probably see it reflected a lot more in the share price. But it just feels like people have to have confirmation now. There's no second order thinking anymore. No one's guessing where things will be. They have to be punched in the face by it. So that's kind of my thoughts.
Yeah, it's going to be a real wake up call to people like you said that aren't engaging in that second order thinking, and obviously the people that are, and that's probably many people in this room, are going to be the beneficiaries of that eventually. Andrew, anything to add to that?
Yeah, I'll just take a quick crack at the other question that came in. I was just looking something up. So mobile inventory, I'm going to take a step out and say that we're between 60 and 80 million pounds that might be out there. Now, just remember, as price goes up, I've got a few extra crates of bottled Coke over here. And if the market price for that Coke goes up, it may not be available at current prices, but I may decide if the price triples or goes up double or whatever, 50%, depending on who you are or what you want, I may decide to sell that. So just be careful with the fact that this is a little bit of a moving target. And we saw Cameco come in and for the first half of this year by 19 million pounds. So there are stuff out there. We know that Olympic is selling. And I'm sure that Cameco can call Olympic directly and talk to them about buying. So I think that there's some of that needs to be considered into that factor. But it is a moving target, but it is on the decline. So I guess that would be my point on that. And then on this other question, yeah, I think, look, if you're not positioned now or you don't have the patience to wait around and you just want to trade, knock yourself out. But again, I think people should certainly have a core position here and just relax. I mean, we've seen lots of ups and downs in this market, and maybe we have some stagnation for the next few months, or maybe for the rest of the year until the elections are over in the U.S., COVID's done, RSA is handled, maybe, and the utilities can come back out of their hole and maybe make some decisions next year. So I like the setup that we have, and the conviction is beautiful.
Okay, and on that note, I was going to throw this out to the panel anyway, and maybe this is a good time because you've kind of talked about it a bit here, Andrew, and maybe I'll start with you, Justin. You know, we had obviously the March lows in the entire markets due to COVID. The markets recovered. Uranium stocks outperformed significantly on that upswing. And then we had another sort of, maybe stagnant period in the market where uranium equities kind of trended down, and that seemed to bottom around the end of June, give or take roughly. Just curious for your opinion, do you think that we will retest the prices that we saw in some of the uranium equities at the end of June?
Who knows? I mean, it's possible. Anything's possible. It's very difficult to make short-term predictions here in this market. It's like, Andrew just mentioned a number of the things that are overhanging the sector, particularly with utilities buying, but it's a tough call. I think that at this point, what the market needs is some sort of bullish guidance, maybe coming from Kazatomprom, or some movement in the spot price to kind of maintain the uptrend. Honestly, I've continued to see all weakness through Q3 of this year as buying opportunities. The long-term picture for me hasn't changed one bit. So the sell-off that we're seeing today is, not pleasant, but it's not really unexpected, or I definitely won't see it as not an opportunity to add to my positions. The juniors seem to be holding up well. Big names are kind of selling off, but it's really hard to make short-term predictions, to make a long story short. So I don't know if we see those June lows. I kind of would like to see us make, in general, kind of a higher low, which would be a great buying opportunity going into Q4, in my opinion.
Okay, and I'm going to pivot back to Ferg here for a second, and this is maybe a bit of an offside, but I think it's an important point. If you follow Ferg on Twitter, you'll see him mention it a lot. Ferg, for those who aren't maybe familiar with the term, can you explain when you say second order thinking and the importance of bringing in second order thinking to your, investing and trading, why that's so important?
Thanks, John. Well, it's just essentially understanding what's coming further down the line. Like, it's making decisions now on what profits will be in a few quarters, I guess, is the simple explanation for it. Not concentrating on just what you got in front of you, which seems to have largely been forgotten. Everyone just loves the big growth companies and isn't prepared to wait a few quarters for what is increasingly looking very likely to be a great outcome. They just want to chase the sort of the thing at the moment, and that's largely how to explain it. It's just delayed gratification is another way of putting it, and doing homework, I guess, doing a lot of research in the sector to understand what's going on. And I don't think there's much of that at the moment at all. Everyone just likes the passive approach and not putting in the effort to understand this, apart from a small community at the moment.
Yeah, and I think obviously, part of that small community is in this room today, and and I think I can speak for all the panelists. All four of you have obviously put in a lot of homework. You are not just looking at the short term. If you're looking at the short term, it's more for analyzing, buying opportunities, as Justin talked about. If there's another dip, then you would view it as a buying opportunity rather than thinking the run is over. Like, everybody here is here for the big runs that come from the long game when the supply demand imbalance in the sector eventually turns around, or the market wakes up to it. Anyone want to add to that, or tackle the question about, have we seen the bottom in the June lows? Is that the bottom? I'm assuming everyone else here would be a buyer if we retested those June lows or went lower for whatever reason.
I've been waiting with powder in my account because I think that at some point in time the general market needs to get in line with what's actually happening in the economy, especially the U.S. economy. So I've been expecting some sort of correction at some point in time, and I'm still holding. So anytime I see any dips, I'll be entering the market for sure. I'll be adding to my positions. But I also wanted to just add something to a previous question related to why aren't we seeing money inflow into this sector? And I think another reason, on top of, people are just chasing FANG all the way too high, in my opinion. But it's also a lot of the people that would normally have eyes maybe on the resource sector now, they've got a couple shiny objects to look at right now, which is gold and silver. So, I think that some of that money that's now pouring into gold and silver would also normally come into uranium. So because, gold and silver is performing fairly well right now, they're not looking at uranium. So maybe if that situation kind of corrects itself, then we might see some of that money coming back into the sector. Now, I don't know this for sure, but it's just something that I think is happening.
Okay, thanks, Terry. It's come up. It came up a number of times during the call. I mean, Cameco, Tim, and Grant had some very favorable words to share about Kazatomprom. Obviously, Kazatomprom and their production and what's going to happen in their well fields is going to play a huge role in the supply-demand balance. Now we have a little bit more clarity around Cigar Lake for Cameco. Kazatomprom and Kazakhstan as a whole is still a question mark. I'd like to throw this out to the panel. Andrew, maybe I'll start with yourself. What are your personal expectations on, do you think Kazatomprom will become a buyer in the spot market this year?
Moving target, but yeah, probably buy something just to say that they've done it for the sake of saying it. I don't know how much they would do, and of course we don't know how the situation with COVID is working out over there in Kazakhstan. But yeah, I think it's safe to say that either they're a closet buyer already, or they will officially say that they've bought something. I'm sure that will probably happen. I don't know that I specifically care too much, other than we know that the material is getting mopped up, and as material gets mopped up at $33, maybe more comes available at $40. I don't know, but the fact is, it's getting mopped up. It's going to take some time to do so, and of course, yeah, their own assets are going to be in decline. They're going to lose integrity of some of those assets. I think Cigar Lake, for example, going back to Cameco, them getting back online quickly, I don't think they had to get rid of most of their workforce. I think they were able to pay them or use whatever vehicles they had to keep their workforce. McArthur River, you won't see it start in 2 weeks. It'll take 18 months, and it'll take a lot of money in addition to their care and maintenance costs. So I think that this is all a good thing. I don't think that they have any intent to talk positive about the market. I mean, it's not in their interest. If they can keep the price lower, that's good if they have to continue to buy. And so I guess those are my kind of 2 cents there as far as, what's going to happen. But yeah, I'm all in favor of them buying, coming into the market, and Kazatomprom buying into the spot market if they can accomplish some of that.
Okay. Justin, do you want to weigh in here? Importance of Kazatomprom, any expectations you have on their end? Anything that you're particularly watching for?
I think that the halting in Kazakhstan is a much bigger story, honestly, than the Cameco story and the Cigar Lake story. I think that it's much more of a black box as far as knowing exactly how that production is being affected. And my understanding of the ISR process and the decline rates in those wells, every week that passes that they're not drilling new wells to expand on the production within each deposit is a substantial decrease in production 3 to 5 months down the road. So I do think that that we're going to see pretty significant decline in production for 2021, and from Kazatomprom and all of their JVs, of course, which has bigger implications, not only for Cameco with their Inkai JV, but for Uranium One and for Orano, who both of them traditionally have been spot market sellers. And if their supply, Uranium One's primary supply is their JVs with the Kazatomprom. So if that gets impacted next year, we could actually see less or no selling into the spot market from Uranium One, and perhaps even some buying. Same thing with Orano. So Orano has Cominac coming offline next year, so they already have that production lost. And if Cigar is at partial production when it does come back online, and their production from their JV, from their Catco JV with Kazatomprom, then Orano could also, at the very least, be not a spot seller and potentially a buyer as well. So big implications coming from Kazatomprom. I really don't have any expectation from their guidance. I have a feeling they're going to guide that they are going to begin getting back into development as far as COVID will allow. But I have a hard time believing that it'll be full steam ahead starting in August. So they're going to do what they can. They're going to do as much development as they can safely for the time that they have between now and winter, which will have implications on their ability to drill wells and inject acid into the new wells. So it's difficult to say exactly what will happen in the short term, but I think there's pretty big implications for Q4 and into the first half of next year, and perhaps beyond that from Kazatomprom.
I think it's a fair comment, Justin, about Kazatomprom being probably the bigger elephant in the room here, and definitely there's a window of opportunity for their wellfield development that is closing. Terry, did you have anything to add here that you wanted to add on the Kazatomprom topic?
No, I think Justin did a good job. There's nothing that I can add to that.
Okay. Ferg, anything to add?
No, it was the same as Justin, really, just that every sort of month that passes by, it's really closing that window, because they just, judging by sort of previous years, how many wells have been completed in the fourth quarter, it's a tiny percentage. I think I was looking, it was like 12% for South Inkai compared to the other months. So they really don't do a lot in that fourth quarter. So anyone sort of expecting that they're going to play catch up, then it just won't happen.
Right. Yeah. The catch up time is now, and that, and that those months are, we're quickly heading into the fall. I mean, we're more than halfway through the summer now. One thing,
John,
sorry, go ahead, Andrew.
No, I was just going to say, Justin mentioned Orano. So Duke put out a term RFP recently for a small amount of material. Orano's a non-threat, especially if they're going to attempt to win this. And it appears that it's more or less structured for them. So, they're certainly not going to be selling into the spot market, and they need material, as Justin indicated. And if they win this small RFP from Duke, then they're going to need a little bit more material. And so I just don't see that Orano is a threat, at least going forward for quite a while.
Okay. Thanks for adding that additional commentary there. One thing I noted, there's a couple things on the call I noted, and I like the thoughts of the panel on them. One of them was, and it was in the MD&A as well, that Cameco is expecting potential impacts to their long-term production at Cigar because they've missed some capital improvements due to COVID. they obviously didn't guide on exactly what impacts that would have. So I'm just curious if anyone thinks that those could be significant impacts. And the other question I had was, do you make anything of the fact that Grant and Tim talked about possibly going into the market, on the spot market, to buy for 2021 production? They said, and I quote, I believe they were in the market every day on spot buying, and they didn't rule out coming into the market, the spot market that is, to be buying for 2021 delivery commitments. Any thoughts on that? Maybe Terry, I'll start with you.
I don't have specific information to provide regarding your Cigar Lake question, but it is something that now that you mentioned, that I'll be looking into. But with regards to the spot purchases for 2021 as well, that's something that Cameco did last year as well. So on the conference calls, they would say, well, we've got so many pounds to buy this year, and we might be buying some pounds for next year. So it's very difficult to predict exactly what Cameco is going to do, because of all the factors that they mentioned on the conference call. Like, there's a lot of moving parts to this thing. But as Andrew said, I think that they're going to want to secure as many pounds as they can at sort of this floor price of around $32-33 a pound, because if the situation stays as it is now, and Kazatomprom does enter the market and buy, even though it might not be significant, I think psychologically and like, it's going to, sellers will say, okay, well, we've got two major producers. Our two biggest producers now are buying. I think that's going to drive the spot price up. But nothing, like, I don't think anyone knows for sure exactly how many pounds Cameco is going to buy for this year. Now, I was trying to estimate, and you and I were chatting about this. They probably have maybe 4 to 6 million pounds that they need to purchase for this year's contract obligations. And so if they want to secure more pounds, then they might buy another 5 to 10 million pounds for next year. But it's just speculation at this point for my part.
Yeah, and I think part of the color of my question was related to, because we've seen this big increase in the spot price, it was interesting to hear them, obviously they're not, even though it's hurting their bottom line, we've seen it, their average realized price, average unit cost of sales this quarter was almost $50 Canadian. That's up 25% from last quarter. They're now, because their average realized price of sales were $46 Canadian, they're losing money here. So it was just interesting to me that they said they were looking to buy into the future. I think, I thought that kind of spoke to, there's still a lot of fear of uncertainty, probably around their own production and global production, right, related to COVID, and wanting to be able to make sure that they can deliver on their commitments. Justin, did you want to weigh on this at all?
Yeah, just quickly, I suppose. I don't know. I think that they kind of put out that rhetoric about possibly needing to buy for the next year. They've been doing that a few years in a row. So not really something to hang my hat on, but I think it basically, they don't really know how it's going to go at Cigar Lake right now. So I think that if they're ramping back up, Cigar Lake process does not go according to plan, or see some hiccups, that maybe they'll want to buy more for 2021. But I also think that the plan to bring Cigar back online sooner rather than later, let's say, might have to do with doubts about them being able to buy what they need in the second half of the year, or in Q4 for 2021. So it's just really hard to say. We're just going to have to see. And, you know, it's interesting with Cigar too, just kind of on a side note with that thought, to hear, I'm forgetting the person's name. He chimed in a few times on the call. He seemed to be more of a mining engineer type person on the board.
Sean Quinn.
There you go.
Sean Quinn or Brian Riley, maybe he's their COO around the production side.
Yes, it was one of the two of those guys. Just mentioning the ore grades at Cigar, and how in order to keep up with that 18 million pounds annual production guidance, that in a typical year that they have to have more throughput, they have to literally physically pull more ore out of the ground in order to meet that, because the grades drop. And the grades dropping is coming soon. It's another couple of years of production in the zone that they're in now in Cigar, and they start to see pretty significant grade drops. So, you know, just little tidbits like that, you can kind of sort of see what's coming. And so yeah, I'm not hanging my hat on him saying that they might be buying for 2021. We'll just have to see what happens with Cigar and how the rest of the market, you know, they don't want to stand alone in the spot market. So if literally anybody else is going to be buying pounds in the market, then maybe they'll come in and get what they can.
Okay. Ferg, anything to add to that at all, or Andrew?
No, not really. I think that's pretty well covered.
Okay.
Yeah, I would just say, John, that just remember, it's another example of how much C&M G&A costs are on top. So when you see all these other developers out there and these other companies who have these costs in their reports, economic studies, this goes to show if Cameco has this kind of money on top just for their G&A and C&M, just imagine what some of these other people are saying. It can't be true. So just keep that in mind when you look at these other companies. Yeah,
that's a good point. And I mean, Cameco is a tier 1 producer, and look at their costs. So this came up during the call. I think it's an interesting topic, and Justin, I'm going to start with you simply because I know you posted a chart on it, and it relates to the volume we've seen in the spot market versus the long-term contracting market. So, you know, Cameco published in their MD&A today, for example, the spot market transactions were 35 million pounds in second quarter of this year versus 9 million pounds last year. April was a new record, 114 transactions for a total of 22 million pounds. Long-term transaction volumes were lower. So we saw 25 million pounds for the first half of 2020 versus 40 million in 2019. Justin, this goes back to that chart you shared, I believe, on Twitter. And I think the source might have been UXC, that, you know, the long-term contracting volumes were roughly, 50 to 60% of what they were last year. What do you read into that? And do you think that gets a big adjustment in the second half of the year? What are your expectations?
I honestly don't have a lot of expectations for the second half of the year. I think that everything that's happening now is sort of a setup for next year, and that's sort of how I'm treating it as an investor. There's just way too many things spinning, way too many overhangs to really hang your hat on anything solid. But I mean, basically, it just means that there was major spot market action in Q2 because of the COVID impacts, and that was primarily coming from Cameco. I mean, we said, what was it, 60 million pounds traded, something like that for Q2. What was it, 60 something?
I think spot market volumes for the second quarter were 60 million total for the half versus 28 million for the half in 2019. Right.
So that's traded volume. So we don't really know how much of that is just trade or churn, just pounds being traded back and forth. And Cameco said that they bought 14.2 million pounds in Q2. So a lot of that purchasing that went to an end user just literally came from Cameco. So obviously the COVID impacts are really what are inspiring that spot market volume. And as far as term contracting, it's kind of the same thing. It's utilities being relatively covered, and at least for the short term. And COVID affecting utilities, we had, well, on top of COVID, also just all of the reloads. The majority of the reactors in the U.S. had reloads this year. So they're kind of focused on operations right now, safe operations, and with all of the overhanging situations with the Iran waivers, the RSA, with the election, I really don't expect a whole lot. So I'm actually kind of surprised to hear that. I think it was Grant Isaacs mentioned that within the past couple of weeks, there have been major utilities putting out RFPs at the market to the request for proposal, basically saying we're looking for X amount of pounds and taking some offers from the market. So just hearing that there is utilities action looking for pounds that are at least in the midterm market is a positive sign for sure.
Okay, thanks, Justin. We have somebody just come on camera. I'm not even sure how they've done it, but if that's you, can you just shut your webcam off? I'm not even sure how that happened. Just as an aside, sorry. Ferg, anything to add on that topic?
No, not really.
No.
I don't have much to add on top of Justin there.
Okay. Andrew or Terry, anything to add?
Nothing
Yeah, I would
here.
say just look, there's just a lot of overhangs, like Justin said. So they're not going to contract or do any term deals of size, and that big volume of terms deals that are supposed to happen, that will happen later, that will happen. But I think that this is actually positive that they're just holding back because of COVID, because of the Trump Biden clown show, whatever it might be, the RSA. So all those things we already discussed. So that's one. And then, the other thing too, what I would love to see, I don't know if it'll happen, but for actual term deals next year to start actually getting done of volume, and the prices get disclosed to where you basically just have finally the reporters giving, or actually just via default via the producers' announcements, potentially that'll happen through these, Cameco and so forth indirectly, that, hey, we just signed a deal at $48. Let's finally see the spot snap to the term price once a little bit of volume happens in the term market. That's what I'd love to see, rather than seeing the spot go up and watching term catch back up. But either way, it's good, but I'd rather see it go the other way.
Okay. And Terry, anything to add to that? I know yesterday we discussed a rumor that went around Twitter, and maybe that context of that rumor about utilities being advised to maybe start to buy. And, do you think there's any relationship to this? The fact that Grant mentioned we're starting to see these RFPs show up in the last week or so?
Yeah, what you're referring to, John, is someone posted on Twitter that one of the consultants or reporters had advised the utilities that they should start to look at purchasing and contracting. And I verified with a couple sources, Justin being one of them, to see if there was any truth to that or any sort of evidence to that fact. And it's not clear that there is evidence that the consultant is actually recommending that. So I don't know, John. I would be speculating if I were to answer that question. I don't know.
Okay. Yeah, no problem. And I mean, hey, we're all here. A lot of this is all speculation, right?
Yeah.
No, fair enough. Let's before we get into there's a bunch of questions I'd like to get to, but before we get into that, I wanted to the panel's thoughts on the Russian suspension agreement. It's obviously, it got mentioned many times on the call. It's been cited as a major impediment for, call it a focus for utilities, especially in the US. Their focus is on that and how that's going to be resolved. Andrew, maybe I'll start with you. Your thoughts on the Russian suspension agreement. Do you have any expectations or anything you're watching around that for how that's going to play out into the second half of this year?
I want to say that most likely it'll get extended. So basically, more or less preparing for what the inaction has occurred. Generally, inaction has occurred from the administration's, and who knows what will happen in November. But I think everybody should just prepare themselves for the fact that something will get extended, and that you wouldn't have those kind of changes happen just because the deal ends, and then of course you have massive import duties for Russian uranium. I mean, if that happens, of course that's fantastic. We all know the result of that, but I think everybody should just prepare themselves for kind of worst case scenario. And then if something else happens better, then that's a plus. But not expecting anything other than it gets extended, or they continue to fumble around and extend the time for negotiations, and it just gets pushed down the road like every other clown show that tends to happen with U.S. administration. So, yeah, nothing big here on that.
Sounds like you have a lot of faith in the American government. Can't be related to why you moved to Panama, right, Andrew?
No, I came here for the bottled Coca-Cola with original sugar.
Which is now for sale.
Yeah. Ferg, anything to weigh in on the Russian suspension agreement?
No, not really. It's similar to Andrew. I've sort of long since given up on holding my breath on anything to do with sort of a political angle. I think there is, was it Dustin Garrett outlining that I think there's a handful of US utilities that are exceeding it presently. So could be interesting if they do make a ruling, but whenever there's sort of lobbying involved, as I say, I won't hold my breath and just let it play out. If it plays out in their favor, then it's a nice sort of positive. If it doesn't, then business as usual, and let the sort of the bigger tailwind play out over time. Sort of, we're just excited to get to early next year when we see all this, all these sort of COVID supply restrictions sort of start to get realized.
Okay. I'm going to switch back to the questions here. An interesting one came in, and I think this is an important one for the nuclear industry. And as we know, the world is coming to an end in 10 years, according to catastrophic AGW by Greta and AOC. There's an increased emphasis on carbon-free sources. Europe has a requirement of renewable energy, and only biomass, hydro, and geothermal are the only baseload sources of renewable energy, according to the IPCC. Many Eastern European countries like Hungary and Poland are arguing that nuclear should be included in the definition of renewable. Germany and Austria are vehemently opposed to this. Has there been any headway in redefining nuclear as renewable in Europe? Does anyone want to tackle that one? Anyone familiar with that situation in Europe? No? Okay. So sorry, Dale.
Yeah, I'm happy to.
Go ahead, Ferg. Yeah.
Have a chat about it. Just following the basis of it, like you've seen a few that have had sort of a 180, such as the French, with originally saying they were looking to retire a lot of the plants, and they've now sort of pushed it out for a decision, pushed it out 10 years, which in politics is as much as sort of saying that they've turned around on the decision and even started to explore purchasing getting some plans for more in the future. I think they put out a requirement for that. So yeah, just in general, I've enjoyed seeing that. I don't know if you've noticed, but quite a few articles have started with, instead of pushing for renewables, it's turned to pushing for low carbon. So that's always been a nod to me that they're now starting to sort of bring nuclear back into the fold of the sort of climate change debate, which is good to see. And you've also seen the likes of Germany just making an absolute mess of it with they're like leading the way with the renewables, outlay and sort of missing all their targets and spending a ton on it. So they can't be held up as a sort of example of what to do, especially with taking the nuclear plants off before the coal. It's just been because they've tried to lead the way with it, and with their example, it's just, yeah, they can't expect the likes of Poland or poorer countries to follow that example. So yeah, that's my thoughts.
Andrew, I feel like you'd have an opinion on this one. Did you want to weigh in?
Well, look, anybody who doesn't understand the position of nuclear as really should be the core focus of energy policy for any country in the world and globally. Anybody who doesn't see that needs to have their head examined. There's just no issue here. It's the lowest form. Everything has a carbon impact. Nothing is renewable. People talk about hydro plants, which I'm familiar with. They're not necessarily renewable because they require maintenance. They also require that you pour concrete and put in, turbines and lots of other things to make it work. And then you have to maintain it. So it's, when you look at nuclear, it's hands down makes sense. I think that there's been efforts by industries that are not in nuclear to sway the hands of policymakers by, for lack of better words, bribing them to do other policies. And then of course, there's just the people out there that are just plain, elected officials that are just plain outright stupid and are not qualified to be in their position of making policy for people that are actually more intelligent than they are. And so it's kind of a sad state of affairs, but I would just say that I think it is slowly gaining ground. There are some smart people that are pushing, and I think people are starting to come around to the realization that nuclear power is standalone, and it works well for developing countries, and it works well for modern nations, and it works well across the board. And SMRs will help to deploy nuclear into smaller emerging markets who can't spend billions of dollars for a plant. So I think it makes a lot of sense what's happening. And I think that it is gaining traction slowly. Everything moves slowly in this sector. But I have a positive outlook. I think it's fantastic. For the folks here that are obviously we're uranium investors and speculators, but I think the interesting thing about all of this is, even if that takes time to play out, the existing fleet that we have before us still requires fuel, and we have a gap already. So what's nice about this whole thesis with uranium is even if nuclear doesn't play out long term, the existing fleet will work nicely for us as uranium investors. So I'll stop there.
Okay, thanks. I know you well, Andrew. I knew you'd have an opinion on that one. So thank you. Just as a quick aside, I see a number of questions coming in around specific stocks, or asking asking the panel if they could recommend specific stocks. Just so everyone's aware, not everyone in the panel is really able to answer that. There are panel guests with us, like Justin and Andrew, that have, paid subscription services. We have to be respectful of that. We're not going to be asking any of the panelists to say all the stocks that they think are a strong buy. But one question did come in, and it's kind of a general question, and I'll just throw it out there. And it basically asks, is anyone interested, and I guess this was kind of speak to confidence, is anyone interested or has been buying out of the money calls on companies like Cameco versus just being long the stock, out of the money calls expiring, far out leaps, like say January 2021 or January 2022. Is anyone willing to talk about whether they like out of the money options as a way to play the sector?
Sure. I'll come in first. I know Justin's probably got a comment, or probably everybody does on this, but I would just tell you that, yes, we had a recommendation within our elite service, and I'll happily share that, where we did buy out of the money Cameco calls and also sold a put as a way to fund that call. That will unlikely, it may work, but it expires 2021. So it may not work for us now. January is coming up pretty soon. I would just suggest, I don't think that's necessarily the best way to play it. I think that if you did some of that as maybe small portions of your portfolio, that might work okay. But for people that want to get exotic, you really should go over to Germany and take a look at the options over in Europe for Cameco. Not in the US, because I think the US stuff, they might be coming out with a 2023 shortly, maybe in the next couple of months if they haven't already for Cameco. But typically German or over in Europe, European options, if you can come across them, depending on your broker, typically have longer expirations. And so I would just encourage people who are wanting to do this to go look over there. They might have a better time frame that would work better. But in general, you know, the meat and the dessert and the drug, if you will, of uranium it's in the junior sector. So, you know, these things are call options. I mean, they're crazy call options. So, you know, keep that in mind how you structure your portfolio, but certainly don't put all your money into long-term call options.
Justin, did you want to add anything to that?
Sure. Yeah, we're also looking at the 2022 leaps. I like the further long dated expirations to avoid theta, just the time decay. I think it's a really easy and low risk way to play a generally rising sector and a generally rising trend. So yeah, I think if you're familiar with options trading, then I think that long dated out of the money call options are pretty attractive for Cameco. So yeah, we're definitely looking at them.
Okay. Ferg, have you been looking at options at all on your end? Do you do any options trading?
Yeah, I do, but I'm not a big fan in the uranium sector just because I think you get enough firepower with the juniors. I just think no desire really to have time decay when I can swap it out for just dilution with juniors, and far more comfortable having sort of a basket of them rather than going down the option route. So that's kind of my take. I've never really been attracted to the Cameco option market at all. I've always kind of thought they were a tad expensive.
Okay. Oh, it's good to get different perspectives here. Terry, have you dabbled in options at all with Cameco? I believe you own. I know you own Cameco stock, but have you dabbled in the options at all?
No, I do not.
No. Okay. So, I mean, this came up in the answers from Andrew and Ferg, and I mean, I think you guys both make good points that you could argue, you know, a lot of the uranium juniors, you could think of them as, you know, a form of call option. So I want to make this, you know, observation. About 6 to 7 months ago, I think we were still having companies take uranium out of their name. And in the last 3 to 4 months, we've had new players coming to the market. You know, I'll mention Standard Uranium. John Bay, their CEO, was in here earlier. Shout out to John. They successfully IPO'd in May. We've had Baseload Energy, James Sykes come into the market with a new company, just two that happen to come to mind. So we're actually starting to see new uranium companies come in, and you know, we're hearing about you know, Aussie interest in properties in, you know, the US and Canada. So I want to know, what does the panel think about this? You know, the fact that we're seeing new companies start to come in. Does this kind of spell the end of the contrarian thesis for uranium? You know, is it possible to still be, you know, an unloved sector when you're starting to get new interest in the sector, when you're starting to get a lot of institutional interest in the sector, seemingly, in some of these junior company financing? What are your thoughts? Ferg, I'll start with you, because I know, you know, per your own words, you love companies that are unloved, and uranium is maybe starting to get some love. Where do you think we're at in that whole love scale?
Very, very early stages. I think if you look at the last one, I don't know how many companies it topped out at, but it was a lot. And so I think we're we're a long way from that. So yeah, you can see the slow trickle in, but I think you're generally far better off with having people that are good management teams and have survived this whole bear market, sort of building a lean, mean machine, and not the sort of guys that start popping up as things look good. It's yeah, I honestly haven't really looked into them at all. I'm quite happy with the guys that I know are in for the long haul and have had sort of previous success in the sector.
Yeah, and sorry, just for clarity, I wasn't. We're not looking for specific commentary on the companies mentioned. It was just more the fact that instead of companies dropping uranium from their name because it was so out of favor, we're actually getting new IPOing companies into the sector, which kind of establishes or seems to indicate an increased interest in uranium. So, Justin, anything to weigh in on that, or Terry?
Sure. Yeah, it's a great sign thing. All these companies kind of come into the space, and we're still so incredibly early. It's for those of us that have followed this thing for a while and are partially or heavily invested. It seems like we've really taken off since March, and some of the companies have. But if you zoom out, we're still absolutely in the first inning, and honestly, a good pullback here would be healthy. Ideally, we see a higher low, but I'm sure that there's been a huge influx of interest in the sector over the past 3 weeks or so. I've noticed just in followers on Twitter and people talking about it. John Quake's posted some stuff about the Robinhood traders catching wind of uranium. Some crypto people, some precious metals traders recognizing uranium now, and so it's been great to see kind of an uptick in sentiment, and I think that whatever pullback is happening today and forever, for how long that lasts, I think it's an unbelievable opportunity to add to positions or to enter if you're on it now. So yeah, we're still very early, and seeing the companies kind of come into the space is a good sign. These people aren't stupid. They know what's coming, and they're positioning their companies to benefit from what is coming.
I have a question for the panel, because one thing that I was paying attention to was the comments in regards to the Greenfield potential of exploration or M&A activity. If you're a CEO of a developer or a junior and you're listening to this call this morning, how do you think they feel given the thoughts that were said?
That's a great question, Carl. I noticed that Tim said that on more than one occasion this morning, that there's no need. Actually, I made notes on it. There's no need for greenfield projects at this time. And I was thinking of John Bay, who's listening in, where they're exploring, they're trying to find a new deposit. And when you do have a resource and there's a deposit, then usually that increases your share value, your market cap goes up. But that was a really interesting comment. And when you think about it, Tim is right. Like, if you start up McArthur River, if you start up all of the mines that are idled or on care and maintenance, there's enough production capability, for a very short-term period of time. But I think that when you look past 2023, 2025, and some of these mines start falling off, demand increases, there's going to be a need for new projects to come online. I think that's unquestionable. Demand right now is about 180 million pounds a year. All mines can produce maybe 140, 150 million pounds a year. So there's already a 30 million pound shortfall, and that's going to increase. So at some point in time, not in the very near future, but some point in time, new mines have to come online, and so those projects that can ramp up and be ready at that time, I think we'll do well. But that's a good question.
Yeah, I'll just follow on with what Terry said, but Gitzel's talking his own book, so just keep that in mind. Jump over to copper, jump over to gold. We don't see Mark Bristow and Freeport McMoran or Barrick and these folks, talking down Greenfields or any of that. There's a reality that exists, and then on top of that, let's not forget about the lead time it takes in the fuel cycle. Terry mentioned 2024, 2023. Well, let's start thinking about the timeline it takes for fuel cycle. That in itself has a good position for us because it's a bottleneck that we know that exists. And then back to the other question that John posed about new companies coming into the space, I have mixed feelings on that. First of all, just back to comments about, we're not here, we don't have an interest in Cameco. We don't have an interest in big producers. We don't have an interest in physical funds. We're here for the meat and potatoes of the sector and the junior sector. But new companies coming into the market, I think that's okay depending on who it is. Is it someone that's worth looking at? And so we're going to have, people need to realize that we're going to have companies come into the sector that are a joke, that are junk, that are trash, that are nothing more than a hype show. Then there'll be others that might enter that actually are reasonably credible. So you have to take it on a IPO by IPO basis or a new company by new company basis. Consider each one individually. Just continue to remember that as these come in. But I think we're still in the negative second inning of a positive nine inning ball game. Certainly we're way early here in the startup of this. And so I think people should just pay attention to that. If tomorrow a guy like Mark O'Day comes in from Oxygen Capital and starts up a uranium project somewhere, I might take a look at that. It's just going to depend on who it is. And then on top of that, discovery, back to this Greenfields thing, discovery, when done under the right conditions in the market, discovery doesn't care. Discovery can perform irrespective of the market conditions. And so I would just caution people that it's a matter of how that discovery happens and what conditions we have. But, so for folks who have discovery opportunities in their portfolio, that can be positive for them if it's done in the right fashion. So those are my comments.
Okay, good comment.
If I could add something to that.
Yeah, go ahead, Justin.
Yeah, I think Andrew made some really good points there. For sure, there's definitely going to be some shady management teams coming in, buying up a piece of moose pasture in Utah and trying to ride the wave. So buyer beware. With any of the new companies coming in, you really have to do your due diligence. Excuse me. I know for a fact that some of them are solid, and we own some of them. But I primarily meant that it's a positive sign for the sector that there's more companies showing up. It looks like the outlook for the sector is generally good. And you mentioned in your question, I believe, something about how the juniors might, or the other companies in the sector might feel about this conference call. Excuse me. I can't imagine they were very happy with it. I mean, Cameco is in complete control here. And I honestly see the sell-off that's happening today as a total overreaction at the management's utter lack of tact in their verbiage on this call. That's my personal opinion. Now, you might say that they're talking their book a bit, and I think that that's true. Like Andrew mentioned, talking down M&A activity. It's really hard for me to believe that they don't see a place for M&A in the market looking out years into the future. So for them to talk that down, that definitely puts a negative spin and throws a wet blanket on things right now. But I do think that they're probably talking their book in that regard. And I think that they have an incredible opportunity with these conference calls to drive the sector in the direction that they want. And so either they're unbelievably smart and tactful, or they're just stumbling along and and tripping over their words. And so it's one or the other. And I'm not going to say which I think it is, but they really hold the cards here when it comes to these conference calls and setting up the sector in the direction that they want things to move. And I really don't think that they necessarily did the greatest job with driving that.
Yeah, very interesting. Sorry, Carl, go ahead.
Sorry, they definitely weren't leaving a lot of room for speculation, but that's okay.
Ferg, anything to add to that at all?
Yeah, I'm following Justin. I thought it was just a bit unnecessary. The sort of the way they went about it, like they could have been more tactful. Like you can, I don't know, like with the Greenfields, obviously you can point out far enough and say that they'll all be necessary, and that'll be the thing for further down the line. And just got to concentrate on getting all their tier ones back online first. Like could have pointed to, what was it, Riaz, saying that you need 2 new Kazatoproms by 2030. Like you can put a positive spin or you can put a negative spin, and just came away from that feeling it was a bit dark when it didn't need to be, and stock prices showing exactly that sort of in the aftermath.
Mm-hmm.
But that probably translates to buying opportunity. I think I don't think anyone on this panel would agree with Tim Gitzel's comments about greenfields being unnecessary at this point. At some point you're going to have to replace Cigar Lake and MacArthur River, and that process takes a long time.
Yeah, and John, I would just say too, look, they have investments in other companies. If they didn't believe that, why don't they just sell? Of course, they're not going to do that because they're probably a little bit smarter than that. But maybe Cameco isn't a company that goes out and puts drill holes in the ground. They leave that to other specialty folks in the sector. It's the same thing in gold and copper. Barrick's not particularly good at going out and punching holes in the ground and discovering things. However, operators like B2 Gold, Clive Johnson, they'll go out, they'll discover something, they'll build it, and they'll operate it. So it just depends on what your strategy is and what your capabilities are. And clearly Cameco talks out of both sides of their mouth.
Yeah. It was interesting. Yeah. So we obviously all noted that too. And I think Terry mentioned, I think he mentioned it like 2 or 3 times. So he certainly went out of his way to throw some shade, as they say, at the junior sector. But just going to get to a couple more questions here. And part of this person's question has already been asked or answered. I think we've already talked about it. How much secondary supply do you believe there is? But the latter half of their question is talking about underfeeding. So I just want to briefly touch on that. Is underfeeding, is the concern about underfeeding and supply, are we past that now? Has the sector moved past that as a major risk? Justin, do you want to tackle that one?
Can you repeat it? Sorry, I cut out for 1 second.
Yeah, no problem. So the person was talking about underfeeding, and I think the gist of their question is they're worried about supply coming back on the market from underfeeding. I was just wondering if you felt that danger to the market with respect to supply from underfeeding. Has that as a main factor to the supply side passed, do you think, in your opinion?
No. I mean, underfeeding is constant, pretty much. It's declining, and it will decline further going forward, but it's pretty much just always happening. It's somewhere between 20 to 25 million pounds a year, pretty consistent. It's slowly been dropping. I think that it'll bottom out, maybe probably less than 20 million pounds a year, potentially significantly less than that once there's drastically increased demand for EUP and for fresh enrichment from new material. That'll primarily come from term contracting. So I'd expect 20 million pounds for 2020 and probably a decline from there. If we see a serious contracting cycle step up in 2020 and for 2 to 4 years from there, then underfeeding will be not irrelevant, but almost irrelevant going forward. So it's a constant. It's slowing, but it's not really at this point. It's kind of baked into the thesis that there's underfeeding.
Yeah, and I think I wasn't trying to imply that it wasn't a factor. I just thought I think it's been kind of exactly as you just said, sort of baked in, and there's not really any unknown risks sort of around that. Andrew, I know you're a numbers guy. Did you have anything color to add on this, the underfeeding side of things?
Oh, I'm certainly not an accountant by trade, but certainly the Justin hit it there. But I would just add that this little Duke RFP that came out just recently, it's set up for underfeeding. It's only like 2 to 3 million pounds. It's probably existing underfeed stock that would be used potentially, depending on who wins. But there's only a couple people anyway that would even try to compete on what they asked for. But you have that. And then on top of that, look, it feeds on itself. We've seen decline. I think we will see more decline in underfeeding. It's non-core in my thesis. But as we get into high volume term contracting that will take years and years to deliver, years in the fuel cycle, yes, that material from underfeeding will start to stock up again. And guess what? It feeds on itself, will have similar consequences in the long term.
Okay. I think we covered that well. Terry, Ferg, unless you had anything you wanted to add there?
Nothing.
Okay.
Nope.
Just going through a few questions here. There was a question from Dale. I think a lot of the questions we've kind of touched on already in one way or another, but Dale's saying, according to PRIS, no new construction in 2020 of reactors, only shutdowns. Any idea when we will get some new construction starts? China, Turkey, Egypt, Hungary, other, etc.
I'll say something here. It's sad why COVID is causing some of this stuff. I think COVID is probably part of the problem, and I hate to blame that, because I think that if you haven't figured out how to mitigate and handle COVID now, we're a little bit behind the times here. But yeah, I think we'll see a resumption once this COVID thing starts to drop off. I think we'll start to see that there's probably, there might be a year delay in some stuff that was supposed to start this year as far as new construction. There might be a 1-year delay, and I'm sure that'll be blamed in part on COVID, and then 2, capital markets, economic conditions as a reason for potential delay. But, going beyond that, I wouldn't be too concerned about that, and it does not hurt anything thesis-wise for us.
Okay. Anything to add from anyone else there?
Nothing for me.
Okay. There was a comment here about an article. I'll direct this Justin's way because Justin's mentioned in the article maybe to start. But Neil says, I read Justin's fantastic article, the #1 bear case for uranium investing. But I would love to hear a little more about how could we all be wrong about this uranium thesis. So just throw that out to everyone maybe. Does anyone play chess against themselves on a daily basis to say, where could I be going wrong with my bullish thesis on uranium? Or is everybody pretty dialed into the fact that, there is no real bear thesis left? Or
I can.
Yeah, go ahead, Terry.
So I really examine the thesis regularly, and I also, I've got a small community of friends here that we're all invested in uranium, and we challenge each other regularly, and to see, okay, what are we missing? Are we wrong? So I'd also like to say that a few years ago, when I first started investing in uranium, well, not a few years ago, maybe a year ago, I direct messaged John Quakes and I said, what are we missing here? Like, it seems like the setup is perfect, but, the equities aren't responding. So I just can't find a bear case. You listen to people that have put in way more hours than I have, such as Mike Alkin and Tim Chilleri, and other people in this space, Brandon Monroe and Andrew, and Andrew has guests on his show, and Justin, and I was chatting with Justin just last week, trying to see what are we missing here. And the only thing that I can come up with would be another Fukushima, another Chernobyl, like a black swan event of that nature. Although what happened in Japan is quite unique in the sense that, instead of like when Chernobyl happened, instead of, impacting one nuclear reactor or a few nuclear reactors or one country, it's all of the nuclear reactors that shut down at the same time, 49 of them, which is major. So could another event like that happen? Yes. Is it likely? Very unlikely in my humble opinion. So I right now I'm more excited than I've ever been. I've never, like, I just cannot believe, I keep pinching myself with how this thesis and everything that's happening right now, to the contrary, everything is looking very bullish in my humble opinion.
I'll step in and just say that look, there's capital market risk. There's the risk of an accident, of course. Look, we can have oil spills in the Gulf, and everybody continues to punch wells and continues to ship oil. But nuclear, it's different, which is, again, a little bit silly. But I think that people should just pay attention to, look, if we have unexpected, really accelerated shutdowns, I think that would be a concern. On the capital market side, look, if you have a panic in the broad market, sure, the equities might get hurt, but that's not a killer for the thesis. I think would be a fantastic buying opportunity. So I think those are your issues as far as, particular theses that bear thesis that might not, that might still have some teeth, I guess, to the story. But I think everybody else, take a deep breath. This is working very well. It's taking some time. And I would just add the caveat too, that sometimes your own self, your own emotions, your own head on your shoulders can be a difficult block as well for maybe things not working out for your own situation as far as how you're approaching the sector. And just one other comment I just thought of as we were talking here, just so you guys understand, with COVID, we had a hydro utility in the Northwest U.S. that cut down their capital projects from hundreds of thousands of dollars to millions of dollars capital improvements on their hydro facilities, cut everything down on suppliers down to $9,000 or less, just as a result of COVID and energy issues with selling energy on the market. And so if that happens with a hydro provider, I think that everybody can draw some similar conclusions that everybody in the energy sector is a little bit shell shocked. So I think that
we lost Andrew.
Yeah, it looks like we lost Andrew. He's still showing up here, but we lost his feed. Ferg, anything to add there?
Yeah, I guess mine would just be, I've followed the likes of Mike Elkin for quite a while, and I always enjoyed his approach to it as like, tell me where I'm wrong. Like, he comes in from that short seller sort of angle, and just constantly hunting for sort of any holes in the thesis. And it's quite an interesting sort of whole sector and how you can actually model out the demand as well as the supply. So I always, follow absolutely everything he puts out and get a lot of, I just like how thorough he is with it all. And yeah, as you say, you've always got the sort of the black swans, but if you if you start to worry about them, you're never going to invest any money in anything. So I just always think those are just largely irrelevant, and that this is just a test of patience. It all is perfectly logical, and as long as we don't lose patience, and if anything, every extra month we get a chance to whittle a bit more money into it. So I think it's a bonus. It's that whole when, not if. I guess you're going to ask me to have a punt on this now, eh?
Yeah, so you've probably seen that come up. So in our last, so we're gonna, I think we're gonna wrap up the discussion here. We've been going about an hour and a half, and that was a really long conference call. It was much longer than normal. So, but before we leave, Ferg, I did want you to put your prognosticator hat on. So the last time we were on, Terry, Justin, and Andrew all made some predictions about obviously spot price at Q2. You can see what everyone guessed and where it is today, but how about throwing your hat in the ring here and guessing at the spot price range for year end? Where do you sit?
I think if the Kazakhs push it out another month or two, I'm going to say a smidgen over 50. Yeah.
So low 50s?
Yeah.
Okay. All right, so there we go. You're locked in at the low 50s, and
what do we win if we're right?
I don't know. We'll have to come up with something.
You know what? My equities are going to perform, so that's all I care for.
Yeah, if you're right, Terry, I think you win on multiple fronts. I think that's what everyone was saying. If Terry's predictions come true, everyone's going to be really happy. So, okay, so let's wrap it up. It has been, I know it's been long for everyone, and I just wanted to say thank you to all the panelists. Coming here of your own free time to share your thoughts with everybody. It's always good to get your perspectives on the industry. I know there's a lot of speculation that goes in with this. In many ways, you're trying to predict the future, like all of us are, in a sense. But I appreciate you going out on the limb with some of your predictions. And again, you don't need to necessarily predict specific future events if you understand the underlying fundamentals of the industry, which I think are quite strong. So. Just so everyone's aware, closing remarks, we'll go to Justin first. So if you're aware, Justin, Uranium Insider on Twitter, that's where you can find him on Twitter. Follow him on Twitter, Uranium Insider, at Uranium Insider, and also www.uraniuminsider.com, I believe. Justin, any comments in closing?
No, I think we covered it pretty well. I think that a lot of equities have had a pretty good run over the last month or two, and this correction is sort of healthy, but I think it's also an overreaction, and I don't think it really changes the story at all whatsoever for the mid to the long term. So the more you do the work in the space, the more you can sort of weather days like this and know how to trade accordingly or not. I see these sort of events as buying opportunities unless the story changes, and the story hasn't changed. So all good. Thank you for having me. It's been great to be in this chat with you all.
Yeah, we again really appreciate you coming. So anyone, if you haven't check into Justin's newsletter, he does have a paid newsletter service. There's been a number of people on Twitter that have just sung his praises on the quality of that. So you can always look into that. Again, www.uraniuminsider.com. Terry, I'll move over to you. Any closing remarks to people, and where can people follow you on Twitter? I believe it's at Terry Papineau 2, correct?
That's correct. And my closing remarks are that I mentioned it just a little while ago. I've been looking into this space since 2016, and it just gets better and better and better as time goes by. And I'm always reminded by Tim Gitzel's remark I think it was the 2019 Q4 conference call remark, or it was the Q3 remark. Can't remember which one. But he said the longer that utilities take to come to the table, the more that the price is going to overshoot. And I think that was prophetic, because nobody could have foreseen the production curtailments that COVID is bringing along. I'm just extremely happy with the thesis, and like Justin said, this is noise. This is what we're seeing today is an overreaction. It's going to keep happening as we're going up, but be right and sit tight. That's what I think.
Yeah, be right and sit tight. Ferg, really great to have you on the show. It's great to have your inputs today. Correct me if I'm wrong. If people want to follow you on Twitter, it's at trader_Ferg. Anywhere else that people can find you? Do you have a blog or anything that people should know about? And any final comments you wanted to share?
Thanks, Sean. Yeah, just on Twitter's where I'm most active. I do have a blog now that I'm just started recently. It's just traderferg.com as well. So yeah, my main sort of leading forward is I just really enjoyed that Mike Elkin's latest presentation when he sort of said if you're a fuel buyer and you're in 2005 looking out 5 years, you'd be looking at a 72 million pound surplus. And now we obviously know what happened then, and now we find ourselves here looking at sort of a deficit that just keeps growing every month. And yeah, I think you just got to sit tight and let it play out. We know how big it went last time, and I think with this being supply driven, it's going to shock a lot of people.
Yeah, absolutely. It'll be interesting to see if this actually exceeds the last run. And for reasons that you've outlined, it very well could. Andrew, great to have you on again. I'm glad you were able to come in here at the last minute and join us. Where can people find you on Twitter? I believe it's at Smith Weekly on Twitter and Smith Weekly Research. If you Google that, you'll find your website. Any closing comments that you'd like to share with everybody?
Yeah, my guidance should be the same, John, if you didn't already make that clear, but I'm going to stick between 30 and 40 uranium for the rest of the year, and then we'll reevaluate later. And then, yeah, at Smith Weekly on Twitter, smithweekly.com for a website. And yeah, I just would encourage people to remain patient, take a deep breath, turn the computer off, go do something else, save capital, make sure you have plenty of cash available for opportunities, and everything is shaping up fantastic, and just take it easy and be patient.
Yeah, sounds like great advice. Sometimes, like again, Terry said it too, be right and sit tight. Sometimes it's just that patient to see your thesis through. So again, thanks to all four of you for coming on. Carl, any closing remarks you want to make before we end the webinar?
Same as I did the last one. I'm just newer to the space and happy to be here. And thank you very much, Ferg, Andrew, Justin, and Terry for joining us again. And hopefully you'll join us for the next call. I love the sector. It really does scream as though there's not much of a bear case unless, there's this another situation that happens with a reactor. So hopefully that doesn't happen. I'm patient, and I just made a fan of the space, and I tell my friends that are interested in speculating and investing to have a look at the uranium space and listen to calls like this. So also, John, thank you very much for leading the webinar today. You did a great job, and your background in this space definitely showed today. So thanks, everybody.
Yeah, thanks everyone for coming, for tuning in, and we'll look to do this again next quarter call, and hopefully the quarterly call will be a little bit more exciting. So take care until next time. See you guys later. Cheers.